Hey, what is up, guys? The recent economic expansion was the longest in the history. You may probably say, the trend is my friend, what can go wrong? The truth is, the trend is your friend until it stabs you in the back and leave you bleed to death. In this video, I will present few leading indicators about upcoming 2020 recession and explain what assets I'm currently buying to prepare for this upcoming storm.
They caught up on their pace. Another 30 days late. LTV 95, LTV 90. They caught up on their pace.
60 days late. Jesus, when is LTV 110? I've never heard of that.
30 days late rated adjustments. 7 rate adjust. LTV 95, 90. Jesus.
I want to short the housing market.
Michael Burry, the weird hedge fund manager from The Big Short, who made millions after predicting the US housing crisis in 2008, called a passive investing a bubble in the Bloomberg interview last week. Passive investing has become a bubble as too much money is flowing into exchange-traded fund or in short ETFs and other investment vehicles that track major indices. Money has flowed out of actively managed US stocks funds in 11 out of past 12 years and consistently flowed into passive funds. The trend meant active and passive funds both had about $4.3 trillion in investing funds at the end of the April. The active to passive shift reflects the rise of the Vanguard and other providers of low-cost index funds, along with investors diverge from the high cost and frequently underperform of active managements. However, Burry clearly thinks the passive investing boom has inflated the value of major stock market indices to unsustainable levels, the same way the subprime mortgages and CDOs inflated housing bubble in 2008. A correction could be just around the corner. Wall Street's favorite fortune teller is telling an interesting story about fate of America's economy. The chances of the recession in the United States over the next 12 months climbed up to 38% in August. According to New York Federal Reserve model that closely watches the model based on the US Treasury yield curve, is up sharply over the past year and now standing the highest level since the Great Recession. Anything over 30% is very bad. A lot of things have to go right to avoid the recession. Inverted yield curve.
Yield curve is a signal that a recession could be coming. And the way we look at that is over the last 60 years, one has preceded every recession. So it's not a precondition for a recession, but it's a sign. Now look at those red bars. Those are recessions. The yield curve is the chart. Look at the fact that it dips before every recession. Sometimes it's 10, 12, 18, 20 months before the recession, but it's a signal. The short explanation is that there's no payback for investing in bonds right now.
Since 1950s, all 9 major US recessions have been preceded by the inversion of the key segments of what's so-called yield curve, defined as a spread between long and short-term date treasury bonds. The yield curve turns negative when the short-term treasury yield more than long-term treasury yields. For those of you who have no idea what I'm talking about, just pay attention, kids. It makes sense if you lend money to someone for 30 years, you would demand higher yield comparing to if you lend your money to someone else for 2 or 3 months. If the yield ratio flips, it means that investors lose confidence in the economy. The yield curve is viewed as one of the reliable recession indicators, although it takes up to 34 months for the recession to hit after the curve inverted. It is among the first signals an economy is shrinking. Let's take a look at the stock market correction in 1990s. Yield curve inverted and 1 year later, recession popped out of nowhere. The same happened in the dot-com bubble in 2001. Yield curve inverted and recession came 1 year later. The same case happened in 2008 housing bubble. Yield curve inverted in 2007 and the recession occurred 1 year later in 2008. Now, yield curve invert for the first time since 2007, which means that it is a reliable indicator that sometime in 2020 we can expect upcoming recession. Recession Out Spike. A New York Federal Reserve Bank analysis of the bond market shows a rising probability of US recession in the next year. The pattern has preceded all 5 of the most recent recessions. It's just the latest warning signal suggesting that the longest economic expansion in American history may not survive the US-China trade war. Inflation. Inflation goes through the roof. Central banks continue to print fiat currency and inflate every financial sector globally, including ETFs. Addition to the interest rates become even lower, which means consumer spending will even be higher as it's supposed to stimulate economy. You may ask, what economy? The only thing it will stimulate is inflation and stagflation, taking purchasing power from average person and transferring to 1%. But eventually, chickens will have to come to roost. Sometimes they will have to fly to roost. Oh wait, they don't fly, they can just probably run. When that happens, it will be the biggest wealth transformation in the history. When the recession hits, wealth does not just disappear, it's being transferred to those who anticipated those events. What am I buying to prepare for the next recession? First thing first is Bitcoin. Bitcoin is the best performing asset in this decade, but it's not the most important thing. Bitcoin is uncorrelated asset to other asset classes. So if stock market will go to hell, Bitcoin most likely will thrive as more money inflow will search for the safe haven asset. Also, if you own stocks and ETFs through the online brokerage account, you are also betting on your brokerage to survive the recession. What if your brokerage firm will go to hell with the rest of the world? Then you can lose everything. Bitcoin, on the other hand, does not carry third parties liability, which means as long as you do not hold your Bitcoin on exchanges, you should be fine.
So why will Bitcoin win? Bitcoin will win because there is now competition in money, and Bitcoin is the best money currently available. Because it's decentralized, it cannot be stopped. It doesn't happen all at once. Nobody switches immediately from fiat and banks to Bitcoin and blockchains. Rather, Bitcoin will simply, gradually come to be used as an occasional alternative to fiat. Individuals will find specific times and places in which it is easier, faster, safer, or cheaper to use Bitcoin to store or transfer wealth than to use credit cards or banks. Indeed, 2 billion people in the world don't even have credit cards or banks. For them, the choice will be easy. Yet despite the failings of the legacy system, Bitcoin now imbues every human on Earth with financial sovereignty. With Bitcoin, anyone of any age, race, or creed, no matter which imaginary lines they were born within, and nothing more than a $50 smartphone, can send and receive money anywhere in the world instantly at near zero cost, and there isn't a goddamn thing that anyone else in the world can do to stop that. It is one of the most potent tools of individual empowerment ever invented, and it is happening right in front of us. Fiat now persists solely on the momentum of tradition. The older generations may cling to it for quite some time, but they and their ways are dying, and their wealth decays in front of them, debased openly by the very people they worship, salute, and vote into office. Someday, school children will laugh and joke with each other as they learn about the silly flag paper with cultish incantations inscribed on it, which, in yet another of history's examples of mass delusion, people thought to be valuable. Or maybe they won't laugh and joke because they will have learned how much destruction it actually caused. Maybe fiat will be looked at more like medieval bloodletting, a dark symptom of human ignorance that is so obviously foolish in hindsight. Fiat will fall in time, and in its place, true decentralized market-based money will emerge. The profit motive alone will lead capital gradually away from those assets which can be debased and censored to those which cannot. To future generations, it will appear as inevitable as the collapse of serfdom, and for the very same reason. This is why Bitcoin or some other cryptocurrency will eventually replace government fiat.
Is that Bitcoin is already working. Bitcoin is functional. It's been operating nonstop for practically 10 years. And it is already, I don't remember the exact number right now, but it is already one of the top 20 largest valued currencies in the world. So it's already bigger than many currencies of many other nation states. And most importantly, in its functional role right now, Bitcoin is the only working alternative to central banks. In other words, if you'd like to send money from here to China, your only option up until the year 2008 was to go through the central bank. Now, after Bitcoin was invented, you're able to do it with the press of a button in an automatic way that doesn't rely on anybody else, in the same way that when you call somebody, you just press a bunch of buttons, but there's nobody needed to let the call go through. It's become a mechanical, electronic process that takes, that happens because machines do it, and it's not because people intermediate it. So Bitcoin is already allowing for transfers across international borders and is already breaking central banks' monopoly over that. So I think the notion that Bitcoin has been failing, I think is completely unrealistic, or the notion that Bitcoin's likelihood of succeeding has been declining and is vanishingly small, I think is contrary to reality, because in reality we see that Bitcoin has been growing non-stop over the last 10 years. And if you've looked at the growth rate and you think that, oh, Bitcoin hasn't grown fast enough over the last 10 years, clearly you haven't looked at the growth rate. It couldn't possibly have grown any could, but it's been an enormously fast growth rate. And the notion that we could get a monetary system, and this is really, I think, the main problem with Professor Seljan's comments, the idea that Bitcoin has to basically be born ready to handle everybody's transactions overnight and to have all of the world's liquidity handed to it overnight from its creation, or else it has failed, I think that is a completely unrealistic way of assessing it. Bitcoin has been growing in every metric that matters, and Bitcoin's been improving in every metric that matters, and there are simply no objectionable reasons why you would say that Bitcoin cannot work.
Second is gold and silver. As we witnessed recently, gold and silver made major spikes. Gold reached up to $1,500 per ounce, while silver reached up to $19 per ounce. It's not a coincidence. Investors are trying to escape from traditional financial market and move into something that can protect them from the recession. In addition to that, gold and silver have been a reliable source of money for thousands of years. As long as you hold physical gold coins and silver coins, you will do well.
99.9% of the world's population is unaware that we no longer use money. We use fiat national currencies. What is a fiat currency? Fiat currencies are faith-based. They are national currencies that are not backed by anything of value like gold. Instead, the government just declares that they have value, and as long as the people keep believing, they do have value, and the people accept them for a while. But here's the thing. There have been thousands upon thousands of fiat currencies throughout history, and they have all failed. 100%, no exceptions.
In fact, people should be buying more gold on this dip. I think anything below 1,500 now is a good entry point to buy into gold, especially when people realize, or traders, that the only reason that we've saved the market from collapse is because the central banks have capitulated, particularly the Fed. We are now cutting interest rates. We're headed back to zero. They have end quantitative tightening. The next move is back to quantitative easing. This is all designed to help the stock market, but it's going to help gold even more than the stock market, because all the money that they have to print to prop up these stock bubbles is going to be better for gold than it is for stocks. And of course, the stocks that will benefit the most are gold stocks. And so if you want to buy stocks and you're a speculator, that's where you should be looking.
So for the next 3 to 5 years, I would probably allocate my portfolio into 2 parts. First part would contain Bitcoin and Ethereum, and second part would contain gold and silver. I believe this portfolio will outperform leading indices, especially when a recession hits. Let me know what you guys think about upcoming recession and this portfolio allocation. Leave your thoughts in the comment section below. If you enjoyed this video, hit that like button and subscribe.